Wow! This equity mutual fund gave a whopping 164% return over the last 1 year. You may be wondering, this is the right time to call your banker and break all your fixed deposit receipts in order to invest in this scheme. But I suggest you hold your horses and go through this particular video before you make up your mind. Hi. Hi, this is CA Aditya Shirvalkar, and in this video, we'll talk about the equity mutual fund scheme that has taken the Dalal Street by storm, and we will know its pros, its cons, and we will also understand whether these kind of mutual fund schemes are suitable for you. Standard disclaimer, obviously this video is only for your general awareness. This video does not intend to give any investment advice, and you should always approach your financial advisors, your CFPs or your chartered accountants who have knowledge in this field for making investments. So let's get started. So first things first, which is this scheme? The scheme that we are talking about is Quant Small Cap Fund Growth Fund. Primary objective of this particular scheme is to seek to generate capital appreciation and provide long-term growth opportunities by investing in a portfolio of small cap companies. So what clicked for this scheme? This scheme has invested 8.59% of its assets under management AUM as on 18th of April 2021 in Stylam Industries Limited stock. Now Stylam has given a whopping 462% return over the last 1 year. This particular scheme has also invested 6.59% of its assets under management in a company called Newland Laboratories Limited. Newland Laboratories Limited stock has given 507% return over the past year. With this kind of astute stock picking, it is not a surprise that Quant Small Cap Fund has managed to surpass all equity funds across various categories and deliver handsome returns to its investors. Small cap funds typically invest their major chunk of AUM in small cap companies. Small cap in the context of mutual funds are defined as stocks that rank below 250 in terms of their market capitalization, complete market capitalization. Schemes that invest in these kind of companies also attract similar challenges when it comes to maintaining their AUMs, which is why mutual fund schemes that invest in these kind of companies are treated as riskier than large cap funds. Within the small cap fund space, Quant Small Cap Fund is one of the higher risk schemes. The scheme has a standard deviation, which is a risk matrix of 20.68, which is the third highest among all of the small cap funds. Its expense ratio too is somewhat on the higher side at 2.39%. Its size also is very small, with an AUM of around 170 crore rupees. It also indicates that the patronage enjoyed by this scheme is relatively less, which means only a few very smart people have invested their money in this particular fund. On the positive side though, Quant Small Cap Fund has the highest risk adjusted return, a Sortino ratio of 8.25. Its alpha, a metric that tracks surplus returns over the market expectations, is also the highest at 74. This fund is for those who truly live by credos like "Dar ke aage jeet hai" and "No pain, no gain." Is the small cap funds category suitable for you? If you are that kind of person who can understand the underlying risks of a small cap fund yourself, or you have a knowledgeable chartered accountant or financial planner or financial advisor helping you out, then you could consider small cap funds in general for yourself. You need to consider other factors as well, such as your risk tolerance, your age, before hopping onto the small cap fund bandwagon. If you need my professional help to get started on your investment journey, visit my website in the video description given below and get in touch with me. Thank you.